Welcome back. It's time now to take a look at the top business stories. US buyout company sets up first investment fund in DIFC. Abu Dhabi's Musafir cargo port reopens. And this week we'll be taking a look back at some of the industry leaders we've interviewed this year. The GCC markets ended in negative territory today, and the UAE bourses also ended lower. The DFM fell 1% to close at 1,603 points. MR Properties dropped 0.75%, while Arab Tech fell 2%. Dubai Islamic Bank lost 0.5%. Emirates MBD was down 4.75%. DU fell 1.3%. 62 million shares were traded, valued at 103 million dirhams. And over in the capital, the ADX also fell today. The market was down 0.75% to close at 2,693 points. The energy sector posted gains, with both TAQA and Dana Gas up 0.02%. Dana shares rose to their highest in a month, adding 2.7% to 74 fills at 11 this morning. The company has been cited as having bid for the rights to explore for oil in 8 blocks in Syria. Aldar Properties fell 0.04%. 74 million shares were traded, valued at 161 million dirhams. US buyout company the Carlyle Group is setting up the first investment funds in the DIFC under the Financial Centre's new regulations that will make fund management easier and cheaper. DIFC chiefs are hoping the new fund license will initiate a bout of registrations of other financial companies to take advantage of lower fees and looser restrictions on marketing. The new regulations were put in place in July by the Dubai Financial Services Authority, allowing firms to manage funds without physically being there, as well as lifting restrictions on marketing to investors. Fees to manage funds were reduced from $40,000 to $10,000. Abu Dhabi's Musafir cargo port has reopened its operations and is expecting to start a 1.5 billion dirham channel that will open the industrial area up to shipping traffic. The port has been underused in recent years due to access issues, as the original channel has not been deep enough for heavy cargoes. The Musafir Industrial Zone, as well as companies such as Steel Industries, Abu Dhabi Ports Company and the Al Jaber Group, are looking to take on bigger roles as the Emirate looks to diversify away from oil and gas. Meanwhile, a second Musafir port is under construction by Abu Dhabi Ports Company. Now, the most popular internet-based activities undertaken in the UAE are emailing and visiting social networking sites, with 63% of households connected to the internet, of which 88% are broadband connections. The TRA has released the results of an extensive survey examining the usage of information and communication technology services in the UAE. Over 4,000 households and individuals participated in the TRA's study, which was undertaken during the course of 2010. The survey spanned multiple services, including fixed telephony, mobile telephony, and the internet, and found that over 99% of individuals in the UAE have mobile phones, and only 46% of households have fixed line phones, as many prefer the use of a mobile. For a detailed market analysis, we're now joined by Anil Sachdev, futures dealer at ACM Middle East DMCC. Welcome to the show, Anil. Now, China raised interest rates over the weekend by 0.25% to 5.81% to help maintain rising inflation levels, which rose to the highest in 2 years. So tell us about what's sort of going on there, and how has this affected their monetary policy?
Initially, they raised the reserve ratios again by 50 basis points to try to curb inflation levels, but they're seeing it not being enough. They raised the interest rates now. The government sees that the rising property prices and consumer prices, along with record trade surplus, could be a dampener for the economy as far as inflation is concerned, and the People's Bank of China sees this rate as appropriate. Asian markets have been seen rising on this news despite the curbing of inflation, as they see that China will be successful in curbing inflation levels, and the risk sentiment in the next year tends to be positive.
So good news there. And oil also has moved to a 26-month high on emerging market demand and shrinking inventory levels, while gold gains momentum on physical demand. Tell us a bit more about these highs and what can we expect for the week ahead?
Oil moved to a high of 91.88, which was the highest since October 7, 2008. The reason can be that cold weather in Europe and US has been pushing demand for heating oil, which is pushing the oil prices further up, along with shrinking inventory levels in the US. We are expecting to see 94 levels for the oil as a resistance, while support maintained at 90 levels. This we could see in the next 2 to 3 months as OPEC maintains its production quotas, not increasing production. And another reason we could see that the emerging markets from Asia are actually contributing to the oil rise and moving towards 100 levels. Also for gold, we could see that physical demand started coming in when it moved down to 1372 lows, where investors see these levels as a strong level for purchasing gold, moving up to 1400 levels going into the next year. And it's strongly supported at 1365 levels. Along with China curbing inflation, we could see investors flocking to the metal as a safe alternative to the currencies. For the coming week, the markets could be thin with trading volumes being low because of the holiday season, and major news could be the US consumer confidence releasing tomorrow. We have German inflation reports, jobless claims coming out this week, along with a few Japanese news.
Well, thank you very much for that, Anil.
Thank you, and wish you a very happy New Year.
Yes, Happy New Year to you too. Now, GCC markets had a mixed run today. Let's check in on those numbers now, starting off with the UAE general indexes. Coming up now, let's take a look at the major international currencies against the dirham, followed by the price of oil and the precious metals. And for all of this week, we'll be bringing you some interview highlights for 2010. So up next, an interview with the CEO of Nestlé Worldwide about their new Dubai expansion.